What's up YouTube? Dougie Chong here. Welcome to today's episode where I'll be talking about Bitcoin. In this video, I'm going to give a brief overview of what exactly Bitcoin is. Then I'm going to give 3 reasons why I think Bitcoin is a buy here today. And then I'm going to go over some of the risks of investing in Bitcoin. But before I move on, I just want to give a big disclaimer. Bitcoin and cryptocurrencies in general are not like stocks. They're in a whole different risk category. Be prepared to lose your entire investment. And I know I haven't been posting videos about regular stocks recently. I will get back to regular stocks soon, but I just feel like the market is really high right now. Alright, so Bitcoin you can think of as a digital currency. A lot of people call it digital gold. You may hear the term blockchain being thrown a lot. They are closely related, but they are not the same thing. Bitcoin was developed in 2009 after the Great Housing Crash. It was developed by an anonymous programmer known as Satoshi Nakamoto, and basically it was made as a decentralized currency so that the banks didn't have all the control. In the Great Housing Crash, a lot of people lost a lot of money because they trusted these banks. The goal of Bitcoin was to create a peer-to-peer network where people could send money to each other without the need of a centralized bank. The details of Bitcoin are a bit complex, but the main problem that was solved with this technology was the double spending problem. We needed a way to ensure that no one person could send the same money to 2 different people. So if Bob wanted to send some money to Alice, and Bob also wanted to send some money to John, we needed a way to make sure he didn't double spend the money, and we needed a way to do that without a central authority. To do this, a consensus mechanism was created, where computers basically did a lot of computations, also known as mining, to ensure that the transactions were agreed upon. And when all the computers agree upon a transaction, it gets added onto the blockchain. In this way, every single Bitcoin transaction is on this ledger known as the blockchain. This process is irreversible and gives complete transparency to all transactions occurring on the Bitcoin blockchain. So that's a brief history of Bitcoin, and that's back in 2009. So why exactly has it gone from like a few cents to being about $38,000 or $35,000 today? The number one reason why I think Bitcoin is valuable and why it is going up so much today is that it has a limited supply. The maximum number of Bitcoins that there can ever be in existence is 21 million. And there will never be any more than that, just like those base set first edition Pokemon cards. It's just like gold or diamonds, rubies and sapphires. None of these have intrinsic value. Maybe you can like looking at them. You can also look at a Bitcoin address if you really wanted to, but it's not like it can be printed at the whim of a government like fiat money can. But even back in 2009, there always was going to be that set limit of Bitcoin. So why now exactly is it going up so much? That brings me to reason number 2 why I think it is a buy today, and that's that a lot of big investors are getting into Bitcoin now. To put it in perspective, if every millionaire in the world wanted 1 Bitcoin, there would not be enough to go around. There's approximately 46 million different millionaires in the world and only 21 million Bitcoins. And a lot of these 21 million Bitcoins are permanently lost. Unlike if you forget your password at a bank or anything else, you can't reset it via email. You just lose those Bitcoins completely and there's no way to retrieve them. So back when Bitcoin was worthless, maybe a few pennies or even a few dollars, a lot of people just forgot about their keys and all that Bitcoin is essentially lost. It's impossible to know the exact amount because it's hard to know a lost wallet from a wallet that is controlled by someone that's just holding for the long term. So to summarize so far, there's a limited supply of Bitcoin and big investors are getting into it. But the third reason why I think Bitcoin is a buy today is probably one of the most important points, and it's the fact that no one entity controls Bitcoin. This is what really got me excited about cryptocurrency and Bitcoin in the first place, is that no one entity controls it. It's not like Facebook made it or the US government made it. It's really hard to shut down if someone wanted to. I think India and China tried to ban cryptocurrencies at different times, but essentially when you ban it, you get left behind it just expands a lot in the other countries. A lot of the miners take their business elsewhere, and you end up just missing out on the cryptocurrency power. No one knows who created it for sure, and that perhaps is a good thing. Alright, so that's 3 reasons why I think Bitcoin is a buy today, but let's look at some of the risks, because there are a lot of risks associated with Bitcoin. The first risk that I'll mention is that the network is always subject to what's known as a 51% attack. I mentioned earlier that the Bitcoin network revolves around these computers doing computations to protect the network. But if any one entity ends up controlling over 51% of this compute power, they can essentially do that double spending. They can control what transactions are accepted on the blockchain. Right now, there's no financial incentive to do such a thing. It's better to just mine it and get some Bitcoin for yourself. But this still is a risk that could occur in the future if mining goes way down. The second risk, as I alluded to earlier, is that if you lose your private keys, you've lost your Bitcoin and there's no way to get it back. Believe it or not, banks do serve a purpose in securing your money, and although they don't really have every one of your dollars in that bank somewhere, it's a lot of just digital ones and zeros, they are securing it for you. And if you forget something like your password, you can usually still get access to your account. When it comes to cryptocurrency, you are in charge of your own security. The private key, that's the only thing that controls it and shows ownership. If you own your cryptocurrencies on an exchange, it's not really as secure, but yes, you can retrieve it back if you forget something like your password. And the third risk when it comes to investing in Bitcoin is a loss of faith. If no one believes in Bitcoin anymore, it is essentially worthless. When I first heard about Bitcoin back in maybe it was 2010, 2011, maybe even as late as 2013, it's a few pennies. I thought it was a pretty neat idea, but I didn't think in my wildest dreams that it would catch on. It just seemed way too niche to pay people with ones and zeros through these digital wallets. I didn't think any of the big investors would end up investing. And as long as that remained true, Bitcoin would still be worth a mere $1 or $2 maybe. But it's the fact that some of these big investors have started piling money into Bitcoin that caused a lot of more investors to join in. Alright, now let's look at some of the fundamentals. Of course, Bitcoin is not a company. It doesn't really add value by making products or services or anything, but we can look at the price and market cap. This chart from CoinMarketCap shows when it was only around $100 for a Bitcoin back in 2013. It actually was less before, but I guess that is when CoinMarketCap started to keep track. Back in 2017, it did go to about 20K, which was an all-time high at that point. Then it dropped as low as 3K and sits around 35K today. And while I don't usually recommend investing near all-time highs, I personally think that Bitcoin can hit that 100K mark. That would value Bitcoin at around $1.5 to $2 trillion in market cap, which is less than gold's total market cap. But of course, Bitcoin is very volatile. I can see it dropping all the way back down to 20K before it goes up to that 100K mark. Also, as I was making this video, I came across a very interesting article. I'll leave a link in the description below. But basically, it just states how Tether, another cryptocurrency, is a scam and it's basically inflating Bitcoin's price. For those of you that don't know, Tether is supposed to have $1 USD in their bank account for every one Tether crypto coin that they create. Unfortunately, this is not the case and they just issue a lot of this Tether and give it away to people for free. People then buy Bitcoin with the Tether, hence causing Bitcoin's price to rise. This whole charade works for as long as people don't cash out their Tether, but as soon as people start trying to turn their Tether into USD or into Bitcoins, we're gonna run into a problem. I've always thought that Tether was a bit shady as they do not show any proof of having any USD funds at all, and I'm surprised that they have lasted this long. But when it does eventually crash, Bitcoin will take a pretty big dip. There's a lot of scams when it comes to cryptocurrencies, so if a coin's promising something ridiculous like 1000% interest, it's probably a scam. It's unfortunate that a technology as new and novel as Bitcoin is associated with all this scamish endeavors, but I guess that's just how it is. That's it for this video, guys. Thanks a lot for watching. Hope you learned a lot about Bitcoin. As always, make sure you do your own research before investing. Don't forget to leave a like if this video helped you at all. Don't forget to subscribe if you have not already. Enjoy the rest of your day and see you in the next video.